So if you're just getting started in the process of how to buy a home, this video is going to be very helpful for you because I'm going to just basically outline all the steps that go into looking and then getting into contract and buying a home. So what is the first step in this process? So the first thing is to learn your market. And in a previous video, I talked about all the factors that are kind of important in researching a market. So you can refer back to that. But basically, you need to, obviously figure out what market you're trying to buy a house in, and then learn about the market. Learn about, how much properties are worth, what is selling, how quickly properties, get go from listed to pending. So some neighborhoods it may take longer. Some maybe it's really short, and that will just kind of indicate that you will have to be quick in your decision if you want to be competitive. Um, you know, just getting a sense of the types of property in the neighborhood. And again, I kind of had another video on all the factors that you can kind of explore and the ways to do it. So, you can review that video for more details on this. You also need to find a real estate agent, also known as a realtor. Why is this? Because unfortunately, as the system currently stands, you pretty much need an agent to gain access to view properties. And also, an agent will be a resource for you to be able to write offers. So they'll have the contracts and kind of all the forms that you need in order to organize and write offers. So they can definitely also help you with learning your market. They'll, if they're a specialist in the area, they'll have, um, you know, good insight into the neighborhood. So, as a second set of eyes and a second opinion, a real estate agent is also very helpful. So, if you're going to be doing a lot of the research yourself, it's perfectly acceptable for you to negotiate a lower commission for your agent because if the agent is actually not going to have to do that much work, looking at comps, looking, figuring out what properties that you want to view. If you're going to do all that yourself and just kind of have the real estate agent walk you through the properties and open the doors and all that, and they don't have to do too much work, it is reasonable for them to be compensated less. So you can negotiate a commission split. So the way it works is, if you're selling a property, you basically will have a commission of, the typical amount is 5%, at least in California. That's kind of the standard. And so you'll will be represented by an agent, and that agent will technically be the one earning the 5% commission. This is called a listing agent. However, the listing agent may not have access to all the buyers that are in the market. So what they do is that they list the property on a system known as an MLS, which is a multiple listing service. And through that system, other agents in the area can view this particular property that the listing agent is representing. And so it will basically have a commission split. So the total commission is 5%. Typically, the listing agent will offer half the commission to the buyer's agent. So if I have a listing, I'm representing the seller. Uh, Another agent has a buyer that they're representing, and the listing agent will have in the listing specified that the commission split is 2.5%. So basically, if an agent is representing you, then so let's just do a little math. Let's say the property is selling for, it's listed for 400K, and that's how much you want to pay for it. Let's say you're gonna put in an offer for 400K. So the compensation for the agents is, let's say the total commission is 5%. So that's $20,000 total. Okay, so what the listing agent will do, so there's a listing agent. is gonna basically have this 20K pool of money. So they're gonna offer a split. So they'll typically offer 2.5% to the buyer's agent. And that in that case, in this case, you will be represented by this person, the buyer's agent. So they will basically be earning $10,000 off this transaction. So you can negotiate this amount. You can say I would like, whatever, 5,000 back, or however you want to negotiate. You can kind of calculate their pool of money, how much they're going to earn based on your offer price, and uh, you may not know this directly, but typically they're going to be making 2.5%. That's like kind of the standard amount. So you can estimate how much they're going to be earning on representing you. So definitely negotiate if you're doing a lot of the work. Okay, so where do you find an agent? So I think the number one best way to do it is referral from a savvy friend or family member who's done business with the agent. So a strong referral from someone and who is smart and kind of has a good eye for people, and that's going to be the strongest uh, thing. Having worked, someone you trust that's worked with an agent before, and they kind of have vetted them and have a good experience with them. I think that's a pretty strong reference. So I would try to see if you can get friends and family to recommend someone. Another way is to see who's listing properties in your market. So I just described this difference between a listing agent and a buyer's agent. So a lot of times the listing agent is gonna be very knowledgeable of the area, because if you're a seller of a home, you're gonna look for someone who is gonna know how much you can get for your house very well. So oftentimes the listing agents are experts in their market, and they've kind of found a way to reach out to home buyers, or rather, homeowners in the area in order to get their listing. So you can see who's listing properties, and typically, like if you go on Redfin or a website that has listings that you can see, it will usually list the listing agent. So you can just Google search their name and try to reach out to them, and maybe have them represent you. Um, and then you can just look on Redfin directly. So Redfin is also a brokerage company, and they will advertise their agents on their website. So as you're searching for homes in your area, they'll have a little pop up that says, "Hey, are you looking for an agent?" And they'll recommend someone. So that that could be, if you're totally new to an area and you can't really find a referral, or just looking online for reviews, then the Redfin agent, that's the easy way to just get connected with someone who could help you. Okay, so after you found an agent, um, I would say even before you're starting to make offers, you should secure mortgage financing. So, if required. So I wrote this because, some people are all cash. If you're not having to finance the purchase of your home, then you don't need a mortgage, obviously. But the vast majority of people are going to have to finance their home purchase with a mortgage, meaning, if you're looking at a $500,000 house, then you will put typically 20%, so 100K, and then you'll get $400,000 loan as a mortgage. So getting the bank that's going to give you this locked up before you start kind of making offers on actual houses is important. So where can you kind of secure your mortgage financing from? So it's from banks. There are mortgage brokers who basically work with a number of different lenders who will represent you and kind of shop around for the best deal. You can also look online. So, Rocket Mortgage. There are certain mortgage companies that operate online. So you can kind of submit an application and obtain what's known as a pre-approval letter. So basically, you go through the entire underwriting process that the lender will require. You submit all your documents, and I have a separate video on, uh, mortgage financing. So refer to that for the details on this pre-approval letter, like what they're gonna ask for. Um, so basically getting that will help you when you make offers, because you can submit with your offer when you're buying a house this pre-approval letter that says that you're ready to get a loan. So for a seller, that's important because they'll be like, okay, this person is submitting me an offer and they've already lined up their mortgage financing, they're already approved, and so it's much more likely that they'll actually be able to close and buy the house. So it looks good if you have this pre-approval letter, and oftentimes, the seller will even say you have to provide one. So it's worth you securing it before you kind of start making actual offers on properties. Okay, so once you've secured your mortgage financing pre-approval letter, you can shortlist and view properties you're interested in. So, um, you know, you're gonna basically be looking at listings. And again, I will have a video on kind of the process of learning your market and looking at listings. So again, refer to that for the actual, the nitty gritty of how to kind of organize viewing and kind of figuring out your market. I will have a video on that where I go online and use Redfin and look at listings and stuff. So, uh, you know, check that video out for the actual details on how to do this. But basically, you're gonna have a list of properties that are kind of listings that you're interested in. You can go through just on paper and using pictures to figure out which ones you're interested in, and then you're going to create a short list. Okay, so the short list are the properties that you're actually going to want to go look at in person. And so the ways to do that are, some properties will have open houses where on typically a weekend, uh, there will be an agent there that's representing the seller, or someone that works with the selling agent, who will just have the property open, and they'll say, between 10 a.m. to 3 p.m. You can just come look at the house. And so you can do that, or you can also schedule viewings. So your real estate agent can be in contact with the listing agent, and they can figure out a time where you could go and view the property on your own, even if there's no open house. So I would recommend visiting multiple times at different times of the day, and this is especially on properties you like definitely want to write an offer on, because traffic, the lighting, all this kind of stuff is going to be different at different times of the day. So it's worth kind of getting a sense of that, especially on a property that you're really interested in. Okay, so once you've shortlisted your properties, you've viewed the property multiple times, you've gotten a sense of it, and you feel like this is a property you really want to buy, then you're going to write an offer on the property. Writing an offer is going to require a couple of pieces of information that are critical. Obviously, the price. So you're going to have to determine what your offer price is. And so, I will have a video also kind of covering valuation. So how to do this analysis. Um, the valuation is going to consider, the condition of the property, like repairs, upgrades. In order to determine this, you're going to have reports and disclosures. So there will be things like termite report, a roof inspection, property inspection. So all these things are going to give you inputs into your valuation. And of course, the valuation is going to be driven by the location of the property, the size, the layout, the bedrooms and bathroom count, all that kind of stuff. And also will include things like repairs, upgrades, the condition of the property. We'll do a little more detail on how to actually do the valuation, but you're gonna have to do a valuation and come up with an offer price. Also, not just the price, there will be terms like, do you want a contingency for uh, doing inspections of your own? So, for example, if you have some concerns about, damage to the property, you may want to specify in your offer that you want, you know, let's call it 20 days to do inspections. So you'll have to kind of specify all that stuff in the offer. And your agent is there to help you kind of with those details of like how to craft an offer that has all these different contingencies. So a contingency is basically a term in the contract that gives you an out, so you have to basically in the example of the contingency for inspections, within those 20 days you can not remove that contingency and kind of cancel the contract. But once a contingency is removed, or the time has elapsed, then you kind of are you're more on the hook for the contract. So, these contingencies are to protect you, to kind of be able to back out of the deal. And so sometimes in competitive markets, people will write offers with no contingencies. So this is good for the seller because then, they have a contract where you as a buyer cannot really back out of. But you as a buyer, it's a little dangerous because if you find some big problem with the property during kind of the time you're in contract, before you close, then you're gonna have to do some shenanigans to get out of the contract. But if you had had a contingency, you could have gotten out of the contract just through using the contingencies. So once you've submitted the offer, if your offer is accepted, you are now in contract. Okay, so there will be a time between the time your offer is accepted to the time the property actually gets transferred to you. And so what happens during this time, this gap of time that you're in contract? So you will open escrow. So escrow is kind of a middle person account. So it's an account that's not owned by you nor the seller, and it's kind of a third party that's going to be the arbitrator of the money. So what the escrow person will do is collect all the money from you, and then um, once the property is transferred, which they will do, they'll legally kind of record the transfer of title. Then they will release the funds to the seller. So they're kind of a buffer between you and the seller to kind of handle the money and the transfer of the property, so that no one can screw the other party. So you will basically open an escrow account with a company like Fidelity National Title. It's usually a title company. So there are a number of these like Old Republic, Fidelity, um, and others. And so you will open an escrow account, and you will put in your deposit. So if the total purchase price is 400K, then maybe your earnest money deposit, your what's known as an EMD, maybe it could be 20K. So you'll put in $20,000 of the purchase amount as a deposit. You'll then perform your inspections. You'll also have to get an appraisal of the home value. So this will be for your lender, because the lender wants to make sure that the price that you're paying for the property is reasonable, and that the money that they're going to be lending to you is against a property that is valuable enough to support the value of the loan. So they will require a third party appraiser to come and establish a value of the home. So even if you're in contract for 400K, some third party appraiser working on behalf of the bank is going to come in and say, okay, what do I think the property's worth? Maybe I only think it's worth 350. Okay, so in that case, the bank is only going to lend based on this 350. So they maybe will only give you, call it 80% of the appraised value. So instead of giving you 80% of 400K, which is, what is it, 320,000, they're only going to give you 80% of this 350K. So basically less. You'll get less than this 320. And so if you wanted to buy the house for 400K, you would have to put up the difference. So let me just do the numbers. So in this case, they'd only give you 280K. So though you had originally planned that the bank would give you 320 and you would put up 80, the bank is actually only going to give you 280. So in this case, you would have had to put up 80K your money and then 320K in the bank. But if it doesn't appraise, if the bank says it's, or if the appraiser says it's not worth 400K, then the bank is only going to give you 280K, which means that in order to complete the purchase, instead of putting 80, you have to put up 120K. So you have to come out of your own pocket an additional 40,000 if the appraiser says that the house is not worth as much. So this appraisal is very important. You have to make sure that your house is going to appraise close to what your offer price is, or you must have the money available to make up the difference. So in this case, you have to make up an extra $40,000. So if you're really stretched, if you only have 80K in savings, then you're gonna really have to pray that the appraisal comes at 400K and not 350, for example. Okay, so also during this in contract phase, you can renegotiate. So if there's something that comes up in the inspection, some big, foundation problem, the roof is leaking, whatever it is, you can then renegotiate the price, or have the seller make repairs before you close. So there's a time to renegotiate. Based on also, if the appraisal comes in lower too. So there are some avenues for you to negotiate based on kind of the outcome of certain things that are happening during this in contract phase. Also, you're gonna finalize your financing. So you had the pre-approval letter, but the bank, in order to kind of finalize the loan, will have to have you update your documents, and kind of there's some final things that you'll have to do to lock in the mortgage financing. So you're gonna have to do that, and then you're gonna have to release your contingencies. So I kind of talked about what contingencies are just a second ago. So you have to release all those, say that everything is okay, and then finally, the last step is to fund and close. So then, if you've already put in a deposit of 20K and your total is 80K, then you put in another 60K. So then there's 80K total. The mortgage lender will wire into the escrow account their 320K. So now the money will be in the escrow account. So it's funded. That's kind of what the term funded means. And then the escrow holder will then see that all the money is there and say, okay, we can now record a a grant deed that transfers the ownership from the seller to the buyer, and then release these funds to the seller. And so that's kind of the final step. And then the house is yours. You'll have a move-in date, and you'll legally own the property. And then, of course, also have this mortgage obligation to start paying, and the property tax. Everything will be transferred on this closing date.